Arjun, my man, what are you seeing at a macroeconomic level right now that's affecting the real estate market?
Well, the key word is inflation, right? That's the one household name or I should say the household topic that everyone has been inundated with. Started off as kind of a quasi rumor, and then and even being labeled so much as transitory by the government and the Fed because they didn't want to create panic, and they really did think, I think, to the best of their intentions, that it would kind of pass. But clearly, it's been here to stay, and it will be here to stay. So that's the single underlying thing that's affecting the macro economy because we're seeing prices up on everything. Now, if you hold assets such as real estate, inflation is a great thing because the value of your asset has gone up. So those that have owned real estate over the last 2 years have experienced a record trajectory in terms of building equity. Now, some of that will cool a little bit or correct in some markets, but they're still going to be sitting in a pretty good spot. The impact to the real estate market specifically that happens when you have inflation is you have higher mortgage rates because mortgage rates and inflation trend the exact same direction. So when you have higher inflation running hot, mortgage rates run hot, which is why we're seeing them effectively more than having doubled in the last 8 months, which is unprecedented. But we also have unprecedented inflation. So eventually when inflation does get under control, we'll see a cooling off of mortgage rates. And I think this spills into some other topics that we're probably going to touch on, but that's where the opportunity will lie for people in the future if they want to get into a home or find real estate now with a long-term vision of thinking I'll have the opportunity to restructure this debt later.
Yeah, makes complete sense, right, when you paint it in that picture. Coming a little bit more narrow, focusing on sort of Marin and San Francisco's housing markets, what are you sort of generally seeing as a result of these continual rate rises?
Well, I don't see that it's necessarily spooked buyers in those price points for Marin. The entry-level buyers who are sadly impacted from an affordability standpoint at a certain price point where they needed the rate to be right here in order to meet this price, given their down payment, the uptick in rates then disqualifies this price point. So that makes it difficult. For the buyers that we have in Marin County, more specifically, you don't see the rate environment being used as much of as an excuse as to why they may or may not buy. Yes, it's causing a little bit of trepidation. There's no question because, I mean, just pull up your computer or your tablet or your phone and just Google housing market or rates, and you see nothing but negativity and fear and doom and gloom. But there's massive opportunity within those high rates. And I think buyers in Marin, I don't want to speak for them all, but I do believe that buyers in Marin are seeing this as a massive opportunity because you have less competition with some of the more speculative buyers backing out.
Absolutely.
Ones who are spooked. That means less bidding wars, which means more reasonable pricing scenarios. And that is huge and trumps a interest rate at any given time because the rate is so temporary. People fixate on rate as the single driver of their behavior as a consumer when it comes to a house, when in reality, and this may not be all that popular, so you got to stay with me for a second, it actually matters zero. And some people are like, how is that possible? How can you say that? How dare you? I even had a client say, how dare you say that? Let me tell you why. Our parents' generation looked at an interest rate or a house as a long-term hold and the loan itself as a long-term play. They didn't ever contemplate refinancing anywhere near the frequency at which people have done over the last 20 years. Plus, how many of us will be able to have our kids say, I'm going home to my childhood home? That's just not going to happen. Our generation, perhaps, because of our parents holding their homes, but our kids are just not going to say that because people move so frequently now. The childhood home you grew up in, you probably turned over 3 or 4 times because people are moving for strategic or employment reasons or schooling reasons. So the behavior of the homeowner has changed in the US, and interest rates are such that a rate is just so temporary. You won't ever hold an interest rate long enough to truly realize whether it was a great one or a bad one. You want to just think of it as an access point to getting into the property because right now, your opportunity is as good as it's ever been. The environment, contrary to what the media will tell you, is getting better with each passing week for a buyer. It gets better and better because prices are cooling a little bit. They're not correcting, and there's a very important distinction there. They're cooling, meaning they're coming down to where they should have been, not where they were exorbitantly. So they're coming down to where they should be. You can get some incentives. you know, potentially from some sellers in terms of closing cost credits and things. And that's something we can elaborate on. And you're just going to pay a more fair price, but not have to engage in a bidding war where you're paying hundreds of thousands of dollars over asking price, which there was nothing healthy about. So this is a great environment right now if you're a buyer who's locked in and being really strategic, because people are going to kind of go away and fall asleep, and this is going to be your time.
And to exactly what you just said, to summarize that, hundreds of thousands of dollars more, if you really look at it from a bird's eye perspective, if you pay $1 million for a unit with a 3.5% interest rate in let's just say April of 2022, now you can get the exact same unit for $900,000 at, say, a 7% interest rate that you're going to refinance after 2 to 3 years anyway. You're probably going to come out like $60,000, $70,000, $80,000 up from buying now cheaper with a higher rate.
That's exactly right, Tim. And the other thing you want to consider, look, just as we're saying, it's a massive opportunity right now for you as a buyer because rates are higher. What do you think is going to happen when rates get lower? You're going to have a frenzy all over again. You're going to have bidding wars all over again. You're going to have more buyers enter the market, which is going to do what? Run up prices. Now, if you happen to be on the other side of the equation now, finally, because you took the chance now and now you own, you will benefit from that run up in price. Your asset's going to be worth exponentially more than it would have been, because if you wait, and there's a real cost to be considered with waiting. Some people say, oh, when you say cost to wait, you're just trying to sell me something. No, I just want you to see both sides of the coin for what they really are. The cost in waiting right now means that, yes, you might find lower rates, and you will, undoubtedly. I'm very much in that camp. You will find lower rates in the US in the next 8 to 10, possibly 12 months, plus or minus. You will. It's just going to happen. But what's going to be happening with prices at that point when they do start to come down?
Everyone jumps back into the market. Now it's a free-for-all again.
That's exactly
it. There goes your potential couple of $100,000 that you could have netted on the purchase side, refinance. Maybe you pay, let's just ballpark and say low 5 figures, 10, 15 grand more for the 2-year holding period of that rate. Now, the only equation that matters is how much cheaper can you buy that property from peak pricing to now, to offset that 15 grand and potentially be up hundreds of thousands.
Beautifully said.
Right.
That's why he's a smart man. Yeah, that's why he knows. So you just have to understand the economics of it and not be clouded by the fear and chaos.
It's all psychology.
Projected. It's all psychological. But if you really look at it, there's opportunities. And never forget this as an underlying premise, or just a note to take away. Some of the biggest brands, biggest wealth creators, biggest wealth generators, all are born out of markets like this because they see opportunity. When the frenzy was going on, they took a step back and said, not for me, I'm going to wait. When everyone got fearful, they got bullish. It's the old Warren Buffett thing. And right now is that opportunity. So you're going to see more wealth created from people making smart plays and strategic moves in real estate. And you can be one of them. It doesn't require anything crazy. You just got to be calm. You got to be focused, and you got to talk to the right people, and your opportunity will be there. I promise you.
Couldn't agree more. Couldn't agree more. And jumping into actually something a bit more specific, tactic related, I'm seeing a lot of sellers buy down interest rates for buyers. Yes. Can you quickly elaborate on what that means and why every single buyer in this market should include that as a term in their offer?
Right. I think the buy down strategy is paramount. And it's one that you as a buyer would have been thrown out. Forget about being allowed to offer. You would have been shown the door and asked to leave the party if you would have even brought this up a year ago. They would have been insulted, the pompous sellers they are. They wouldn't have even allowed you to present it. How dare you come at me with such an ask? Now, because we're entering a more normalized market, buyers and sellers have to sit at the same table and negotiate. It's a term that we didn't even have. So here's a really cool negotiating tactic. And I think it's great. It's a huge opportunity for buyers. And if you've got sellers that are being a lot more cooperative and willing to play, which most of them are, you're going to have a great opportunity here. And that is exactly what Tim just alluded to. It's the buy down strategy. So what happens is, rather than a price reduction, it's basically worked into the deal where the seller is going to contribute and help you buy down your interest rate for a very short period of time. Now, this is not to be confused with anything risky, like an adjustable rate mortgage or anything like that. You effectively have the market rate, which you have to take now anyways, but with the seller, and it's built in, and there's a scale and a formula that's used, which we don't need to get into now. I just want to keep this simple for people to understand. And the rate is bought down at 2% lower than the current market rate. For 1 year, your payment is there. The next year it goes up 1%, and then the next year it returns to the rate that you would have gotten now. So basically, for the next 2 years, you get a rate that's paid for by the seller that's going to be less than the market rate, considerably less than the current market rate, and the likelihood that you'll be able to refinance or restructure this at some point well before that 2-year period is up is extremely high. So you're going to have a win-win. You're going to get a rate that you could have gotten, let's be honest, well over a year ago, potentially. And then you're going to be able to lock in something that's right in between probably that low rate and the rate that's current in market that's going to be, again, in the middle, probably in about a year's time. So you can really come out ahead as a buyer. Now, in the situations where the seller buy down is not either entertained or allowed, here's what you can do in lieu of a price reduction. It's effectively the same thing. And I'll give you an example with a $900,000 purchase. Obviously, that doesn't apply specifically to Marin, but for the broader Bay Area, it could be a price point that could be analyzed for the data here. $900,000 in a situation, and I had a client go through this exact scenario. They said the seller is willing to reduce the price by 20K. What's that going to do? So instead of 900, we're looking at 880. Not a huge difference, but it looks nicer, right? It looks more appealing. They were hoping to stimulate more activity. The result in the buyer's payment, using the same down payment strategy that he was going to do, only moved the needle by about $100 in monthly payment. Little less than that, actually, like 90 something. However, since the seller's already really willing to part with 20K, why not, instead of taking it off the price, keep the price at 900? Let's keep everyone happy. Seller's agent's really happy because the higher comp is recorded, higher commissions paid, and we don't have to signal that we're in some kind of a free fall by cutting price and then putting blood out in the water. Why not give that 20K to the buyer to use as a closing cost credit? Buyer used almost all of that money to buy down their interest rate so significantly that it moved the needle by $475 in payment.
Interesting.
That is a massive windfall of cash flow for the buyer instead of taking the price reduction, because the 20K reduction in the grand scheme of things is nothing. It just looks nice and it looks like a concession. Yes, but if the seller's willing to cut price in lieu of a price cut, and you should always talk to good agents about this, and Tim knows this side of the equation because he deals with it as a very good negotiator. Don't necessarily take the offer at the lower price. If you know they're going to lower price, but hey, why don't we split the difference? If you're going to lower it, maybe not lower it by as much, but offer up a closing cost credit so that my buyers can buy down their interest rate and get something that they wouldn't have been able to otherwise get. You get a little bit of a higher price and the buyer comes away with a fantastic deal. It's a huge win for everybody.
So essentially that one trick just 4x the return of the seller willing to drop 20K.
Big time.
Right? Just
big
literally
time.
With one clause.
Big time.
Brilliant.
And everyone's
Brilliant.
much more happy because you as a listing agent, Tim, what would you rather do? Because you don't want to have that out there that, hey, we're cutting prices everywhere, because then people are like, all right, if you cut already, why don't I sit and wait to see if you cut again? You know, they just sit on the sidelines and wait. They think it's like, all right, I think they're not done yet, right? They're in a free fall. You know, this boat's about to be overloaded. So yeah, I think it's an opportunity.
Good. You're the man. I appreciate every single time we get on one of these calls. If anyone watching wants Arjun's contact information, it'll be below this video. As always, my man, thank you.
Thanks, brother. I appreciate you and everything you do, man.